Hi there, it's Yoon here from the2traders.com. I just wanted to do a quick video to explain to you what we think is happening in the equities market right now. So you can go to our website and you can check out the live charts here, and you can do all your analysis on here, and you can pop these out, and it brings you to a kind of a new window like this. So you've probably all seen the news with the tensions that's been going on with the US and North Korea. This is something that's happened a lot of times before, and it's something that the markets perceive as a risk and have done for the last few decades. So you can see the SPX, which is the S&P500, actually dropped 2 or 3% the other day when Trump came out and the Koreans said they were going to bomb Guam. And the S&P's been uptrending pretty consistently all year. I think it's up 29% year to date, which is very strong compared to historical average, which over the last 60 years is actually only 7% a year. So we're way above, way outperforming here. And similarly, European markets have struggled a lot. So we've seen the DAX here. It's pulled down from 1300 down to 1200. And we've actually got what we call a death cross here. So it's where the 50-day moving average crosses the 100-day. Well, this is the 45-day, so it's pretty much the same. And the last time this actually happened was properly was back in 2016, where we saw it up at this 12,000 level, 1250, and then we see it first, it crosses below here, and then it actually goes all the way back down to below 9,000. So there's a lot more downside in this market right now. And although the US-North Korea tension was what sparked the sell-off, I think in reality there's a lot of people who are just looking to take profits in here. So both these markets have been rallying very highly this year, and all it takes is a small correction and people start panicking a little bit and start selling off. What it means is what can happen is that this kind of small panic can turn into a large drop very quickly if people start taking their profits and fueling that selling. So there's another big contributing factor here, which is I'm not sure, you might not be aware, but the interest rates last 10 years have actually been incredibly low, and they've been negative in Europe. And what's happening recently is we're starting to see a normalization in monetary policy. So what that means is the US Federal Reserve are looking at increasing their rates again in September. We've got the European Central Bank expected to announce the end of quantitative easing, and similarly they're going to start increasing their rates again as of next year. So we might start seeing people moving away from equities, which recently have been the only place to get decent returns. Interest rates are so low, people flood to the stock market to try and get a good return on investment. And what happens is when interest rates increase, people start moving back towards bonds and credit as you start to have a higher yield. So we might see people moving money out of equities. And this could fuel kind of a more serious downtrend. Although the US-North Korea tensions might have sparked it, there'll be a lot of people that are going to start looking and moving their money away from equities anyway. So maybe this is just going to be the catalyst. And I wanted to go through some of the bigger losers this week. So we've got Nvidia here, which actually beat its earnings forecasts on Thursday, and despite that, still had a pretty huge sell-off. And what you can see here is actually gapped down, and this is because the expectations for these tech stocks are actually just way too high. This is a stock that's gone from $10 to nearly $180 in just over 2 years, which is an obscene increase for a stock. And again, there's going to be a lot of people taking profit here. So if you've seen our video and guide on gaps, which I've got here, we've got a video on the website as well, which explains this whole concept. And you'll see this looks like a pretty big exhaustion gap here, and there's going to be a lot of people looking to take profit. And similarly, after it's kind of made these new highs, there wasn't enough buying power to support the market at this level, and there's going to be a lot of people stuck on the wrong side of this gap. So if this isn't filled, people who've been buying up here are going to have to start selling their positions back, and this could fuel a much larger sell-off here. And this could trigger into a kind of full-blown downtrend, and we could see it come all the way back down to maybe 120, 110 if this kind of these positions up here get stuck and they start selling off. So I think if this gap isn't filled in the first 2 or 3 days of next week, then I think we're going to see a lot more downside here. And the last one I wanted to look at was SNAP. You might have seen their earnings came below expectations on, I think it was Friday. Yeah, it's Friday or Thursday actually after hours. And this gap's down 16%. And again, the mark is very long on all these tech stocks, not Snap particularly, because it did actually IPO at 16, and the first trading day went straight up to 25 and then up to 30, and it's been coming down since. But everyone's very long on these tech stocks, and that's because there's been nowhere else to go. And people holding a very high proportion of these equities, and if people start pulling out of the stock market in general, then these can be the ones who suffer the most because they have a very high beta, very high volatility. And this is why these drops are so dramatic. I've got Amazon here as well. It's pulled pretty significantly down after we made these new highs, and it's currently about $100 down. And same again here, NVDA, even though it did beat expectations, it's come down from 173 down to 155, and I wouldn't surprise if this keeps going lower. So that's all I want to highlight from this video, and we'll see what happens next week. Make sure you check out our guide and video on gaps if you're not familiar with how to trade them. But that's everything from this, and good luck trading.